Ladies and gentlemen, good day and welcome to the Bikaji Foods International Limited Q3 FY23 earnings conference call. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star and then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Vijay Gyanchandani from S-Ancial Technologies Private Limited. Thank you, and over to you.
Thank you. Welcome to Bikaji Foods International Q3 FY23 earnings conference call. From the management, we have today Mr. Deepak Agarwal, Managing Director, Mr. Rishabh Jain, CEO, and Mr. Manoj Verma, CEO. Now I request Mr. Deepak Agarwal to take us through the key opening remarks. After that, we can open the floor for the Q&A session. Thank you, and over to you, sir.
Thank you, everyone, and namaste. This brand is Bikaji is introduced in 1993 from my father. Bikaji name is inspired from the city Bikaner and the Rao Bika, who was the king of Jodhpur and founded the Bikaner. Before 93, we had a brand name Haldiram Bhujia. Haldiramji was my great-grandfather who started this business in 1940. And he himself manufactured the bhujia and sells at the one shop only. And then later on, the bhujia is day by day is becoming famous from all the part of India. And bhujia has a one special ingredient, three special ingredients. One is moat dal, and moat dal is only crop produced and farmed nearby the Bikaner and in Rajasthan itself. Whereas all other kind of pulses are cropped, farmed, and from Argentina to Australia. But moat dal is only nearby Bikaner. That's why bhujia is famous for the Bikaner. Then my grandfather has shifted. My cousin grandfather shifted to Calcutta and some other part of the countries, and everyone has started this legacy with the name of Haldiram Bhujia. Then later on, in 70s, my father's generation has come, and my father are 4 brothers. So one of my elder uncle has shifted to Nagpur in 1972-73, which is called today Haldiram's Nagpur. Then his second is my father, and then 2 of my younger uncle, had shifted to Delhi in 1982-83, so which is called today Haldiram's Delhi. But later in late 80s and early 90s, there were some misconfusions about the territories and about the brands. So everyone has decided to be restricted with some territories and they have divided some part of north, south, east, west. But as my father was a visionary and he never wanted to settle for a specific state or for a specific area, that's why he introduced his own brand that is called Bikaji. And today we are the manufacturer of sweets, namkeen, different papad, frozen food, and different categories. In the board, we have 3 family members. One is my father, Shivratanji, then is me, myself, Deepak, then my wife is Shweta Agarwal, who is looks after all process production, a full-time director. And then we have a non-executive director and Sachin Bhattiaji from the Lighthouse. BB Guman is from the IFL, which is recently, in the last 2 days, she has resigned as, there's no, and then we have Siraj Ahmed Chaudhary as an independent director, Richa-ji. Siraj-ji is, on the Tata Consumer Board and as an ex-Cargill chairman. And then Richa Manoj, she is the CAS and compliance and looks after and already on the board of 3 to 4 listed companies. Mr. Pulkit Bachawat from the Ahmedabad, who is, as an advisor of 2-3 companies, and he is a CA. Nikhil Voraji is, from the Sixth Sense, and, he is one of the finest investors among the new categories and new products companies. And Vipul Prakash is right now the CEO of Make My Trip and had a experience in the sales of 20 years in Lay's. In our team, we have a professional that is our Manoj Verma, who was in the last Mrs. Better and had a great experience in Cadbury's and others. And he looks after the sales marketing as a chief operating officer. Whereas Rishabh Jain, who is our CFO, is with us from last 2015, And Rahul Joshi ji is, from the last 1 year, and he looks after all the legal and compliances. And Shambhu Dayal ji is, with us from the last 30 years, and he looks after all the finance, accounts, and corporate affairs. In a small snapshot, I just would like to highlight that we are the third largest manufacturing and ethnic snacks company in India. The largest manufacturer of Bikaneri Bhujia among all the players in India. The second largest manufacturer of handmade papad after Lichat. And with this, handmade papad, we give at least employment to more than 5,000 women every month by making papad handmade. And we have almost around 500 direct distributors in India, almost 2,000 distributors direct and indirect, and strong export network, more than 25 countries, and the CAGR, it's around 20.4%. The last FY22 revenue was 1,600 CR. And we have a huge range of, our snacks, which has, snacks, papads, sweets, roasted namkeen, frozen food, many other, different kind of extruded snacks, chips, western snacks. So we cover almost all the kind of products. And our core market is like, Rajasthan, Assam, Bihar, Northeast, and part of Haryana, Punjab. And whereas, our focusing market is like, Uttar Pradesh, Delhi, nearby Delhi, Punjab, more of Haryana, Gujarat, and Karnataka. Recently, we have introduced the new products, that is, khakras. You must be aware that this is a very big legacy of Gujarat. And now, as in, the people are getting more healthier and, roasted namkeens and roasted things. So we have also introduced multigrain bhujia, jowar mix, and some other roasted namkeen as well. And we are, taking more, introducing more better products. Here, I want to highlight that, we have 5 manufacturing locations. One is Bikaner. The another one, last year we have opened in Guwahati, Assam, in South India, Tumkur, Muzaffarpur at Bihar, and just October we have started as a contract manufacturing unit at Kanpur. Kolkata also, Kolkata city, where we have a CMU also, and upcoming one is in Patna. So that you can see in the Indian map. So these all the manufacturing units where we manufacture all western snacks, extruded snacks, namkeen, and trying to be, reduce the logistic cost and enter into a focus markets. So now for the sales and marketing distribution, I would like to invite to Manojji for further.
Thank you, Deepak. As Mr. Deepak Agarwal spoke about, our strategically located, manufacturing units, which were existing and the ones which we started over the last 18 months. So each of the units which has come up outside Bikaner is a well thought through stuff, so as to support our core markets. So core markets for us are Rajasthan, Bihar, and Assam. That's where about 73% of our business comes in. And each state is pretty, distant or far off from, if you look at from Bikaner or Rajasthan. So as to support their sales and the kind of growth what we are witnessing there, we came up with plants in Guwahati for Assam. We came up with plant in Muzaffarpur, which is in Bihar, and upcoming plan very soon coming up in Patna as well, which will complement our Bihar business. Then as if we look at, talking about our focus states. So focus states in the south are Karnataka and Telangana. So to support these states, we acquired the plant in Tumkur, which is second plant what we call. And for UP, which is one of the largest markets, to support this, we came up with a plant in Kanpur. Now talking about a pan-India network, so we're a very strong brand across country with a strong presence in 25 states and 4 union territories. Besides India, we have a footprint across 25 countries with a export revenue contribution of about 2.6%. If we look at our distribution network, so within India we have 8 depots, 46 strong super distributors or super stockists, and a direct distributor base of about 507. Besides this, if we look at now our footprint in terms of retail coverage, so it's about 2.6 lakh outlets. That's what we cover directly. We are in process of automation and trying to put it up on our lat long, so all in the system. So as I speak, we have about 136,000 listed outlets for which we have lat long and complete details of these outlets. This is what is part of our strategy as well to increase our direct reach. Talking about our marketing initiatives, so we are amongst the largest spenders in the marketing investment within the category we play. So we are into all vehicles, all channels of communication. So starting off radio, so across channels, big FM, big any of the radio channels we speak about, we are present. Then we talk about out of home, so which is about hoarding. Then doing BTL campaigns in the stores so as to drive offtake and build our brand further. Shop and shop presence in modern trade outlets, for example, Reliance. Then we also participate in the conferences and in the exhibitions which happen overseas so as to complement our exports business. We also spend on ATL programs like Kaun Banega Crorepati. We were present. We were associate sponsor for that, which is a national program. And besides this, there are a lot of other activities, which could be stated as, the print media and also sponsorship of certain movies which come up, kind of stuff. So our presence is strongly felt across. Talking about our business performance, so if we look at our quarter performance, so the revenue growth for quarter 3 over last year quarter 3 is 15.6%. If we look at within the categories, so ethnic snacks, if we look at, has grown at 21.4%. Packet sweet is has grown by 17.3%. Western snacks is grown by 23.8%, and papad has grown by 14.5%. Here I would want to take a pause and just bring clarity that packet sweet has a huge component of seasonality, and which is Diwali season. So if we look at this negative growth is not because of any other reason other than the Diwali this year was little earlier than what it was, little later than what it was last year. So hence there is a shift between quarter 2 and quarter 3 of packet sweet. Otherwise, when we look at our secondary numbers, so they are seamlessly in line with what we did in quarter 1, quarter 2, and quarter 3. I would request Rishabh to take the revenue numbers.
Yeah. Thank you, Manoj. So overall, on a revenue 9 months basis, so we grown at 24% plus over 9 months. We closed the revenue of plus 1,500 crore rupees compared to 1,200 crore rupees which we did last year 9 months. Our ethnic snacks have grown at 22.6% compared to last year. Packaged sweet has grown overall at 17.6%. So if you see, in third quarter, we grew in packaged sweet due to festive season. This year, Diwali was in October versus last Diwali was in November. But overall, when we see 9 months numbers, we've grown at 17.6%. Western snacks, so our major focus is in Western snack namkeen segment, being that all the plant is supporting these two categories. So we've grown at 95% plus in our Western snacks category. Our papad segment is growing 19% plus. So across each category, we've grown at double-digit number. But on a key quarterly highlights basis, so our revenue has grown 15.7%. On YTD basis, we're growing 24.2%. EBITDA, so we closed the EBITDA of close to 151 crore rupees in 9 months versus last year. We had done close to 94 crore rupees in 9 months numbers, and we've grown at 114% compared to quarter 3 last year. And overall on 9 months basis, we've grown at 56.7%. On a PAT basis, so we've grown at 195%. So last year we done a PAT of close to 11 crore rupees in quarter 3 versus this year we done a PAT of close to 31.7 crore rupees. So basically there was a lot of effort which has been gone, and also there was reduction of few edible oil prices, few mold dal prices. So thereof we increased the gross margin close to 2.5%. If you see, the gross margin was close to close to 28% versus quarter 3. Your gross margin has improved and it has gone up to by 2%, and we've done a gross margin 30%. This has been basically for two reasons. One, edible oil price, which has been moved down, and other and of key products like mood dal, that the price has been softened down. So they are also largely we also engaged Big Four, one of the Big Four, who's helping us to set up our RTM, set up our distribution system in a core and focused market. Also, one thing is I'd like to highlight that we have taken a decision to merge Hanuman Agro into Bikaji Foods. So we invested close to 110 crore rupees plus in the form of CCD and CCPS. On 1st of January 2023, that company has become a subsidiary, and we acquired close to that CCPS is converted into equity shares, and our holding was close to 99.65%. In our last board meeting, which was held on 25th of January, we had taken a decision of acquiring balance 10,000 shares from two shareholders of Hanuman Agro, and now this company will become a 100% subsidiary of Bikaji Foods International Limited. Post this, we are targeting this merger to be completed by September 2023 end. So this plant will basically produce namkeen and western snacks category. And the plant will have a present capacity of close to 60 tons per day. The benefit of merger is basically there is no point keeping two companies as this is only a manufacturing company, and also there will be overlapping of managerial work, overlapping of financial, technical, human resource work. So we are targeting to remove this, and also there is a loss of GST because there is subsidy input which are lying in that books of accounts, which will post merger we can use this into our books. Manoj?
Yeah. Talking about our long-term growth strategy, so as we called out, so they are the four pillars. First and foremost is about to implement distinctive growth strategies for markets like core market, focus market, and other markets, because same thing would not work in all geographies. Second was to complement each set of states, establish strategically located new manufacturing facilities, which would help us, grow both the top line and the bottom line. Third one, what we called out for ourselves is that we continue to build our brand and further strengthening it, hence the continued marketing investment. And last but not the least is move towards automation, so which is what we are in progress and what we are heading towards complete sales automation. And it's not just about sales automation; it is also automation across functions. With this, I open the floor for questions or Q&A session.
Thank you. We will now begin the question answer session. Participants who wish to ask a question may press star and 1 on your touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. We have the first question on the line of Abneesh Roy from Nuvama Institutional Equities. Please go ahead.
Yeah, thanks for the opportunity. My first question is on Western snacks. It is highly competitive. So wanted to understand why you want to be here. Doesn't it dilute your brand in terms of being a Indian snacks company?
So one is if you look at, the Western snack category, is growing slightly faster pace than what the traditional snack is doing. Second thing is, if we look at, the split between the certain states, say for example, if I talk about Assam, which is our very strong state where we enjoy almost about 58-59% market share in traditional snacks. But the size of Western snacks there is 65% is Western and the balance 35 is traditional. So it's true for many other states. So while we will continue to keep up our focus on traditional snacks, we didn't want to ignore or miss the opportunity on what we have for Western snacks. Because end of the day, channel is broadly the same, outlet is the same. It's only the product, and we did have the capability and capacity to produce that. So we didn't miss the opportunity.
Right. My second question is on the papad business. You have done well, so it's highly commoditized. So what is working for us in this part of the business?
So So basically, we are manufacturing handmade papad, and it's largely an organized segment. So we want to, it's close to 8,000 crore market, and there is no organized player in this other than Digit and us. So we want to use this into, we want to make a big brand in papad, and we can take this business to, I think we can double this in next 3-4 years. That's what our target is.
Oh, that was my question. If it is that no other big organized player is there, what was the reason? Because if it was too easy, then other players would have entered, right?
Yeah, right. But actually, it's basically largely, there are few local players. There are always, you will see papad is largely unorganized. And there are few local players who are manufacturing, who are making papad in-house and local. So that's how it's taking time, and we are also working on the same to make this market more organized.
Okay, thanks. That's all from my side. Thank you.
Thank you. We have the next question from the line of Shirish Pardesi from Centrum Broking Limited. Please go ahead.
Hi, good evening. Thanks for the opportunity. Just two questions. On the Hanuman Agro, now it's become 100% subsidiary. So maybe any one of you can give me the help saying that what is it that we can expect in terms of revenue and synergies in terms of margin expansion over next 2 to 3 years?
So basically, Hanuman Agro, we have done an investment in the form of CCK and CCPS in last 2-3 years in Hanuman Agro. And basically, this company will merge into Bikaji Foods, and from a revenue perspective, so this company is having capacity close to 60 tons per day. We are targeting, so at a full capacity, it can give turnover close to 350 crore rupees type of thing. So we want to use this capacity and make this Western spice namkeen business. So basically, this plant will normally is largely serve Rajasthan, Haryana, Punjab, nearby markets, and that's how we want to build our revenue.
Rishabh, thanks for that explanation. I'm slightly getting confused. 60 tons per day is the capacity utilization which is going to happen in the future, or it's already at 60 tons?
Ladies and gentlemen, the line for the management has dropped. Please stay connected. We will reconnect the management shortly. Over to you, sir.
Yeah. Hello.
Yes.
Should I repeat the question?
Yeah.
So I was slightly getting confused. You did mention that 60 tons per day is the already capacity utilization is happening as on date, or it's the future?
No. It's total capacity which we have right now.
Okay. So what's the current production against this?
So current production is close to 15-18 tons type of thing. Because this plant is recently installed.
Okay. And when do you think you will reach the peak capacity here?
See, we are targeting in next 4 years, we want to reach a peak capacity.
Okay.
Next 3 to 4 years.
Okay. Thank you. My second and last question on the margin front. I did hear you in the morning on the media channel. Maybe just to fine tune, I mean, currently directionally all the raw material looks benign. And on a QOQ monthly basis, the palm oil prices are also correcting. So in a next 3 to 4 quarter, aspirationally, where would you like to settle in terms of gross margin and EBITDA margin?
See, so gross margin, we want to, so our target is initially to settle at, so in first quarter, we gross margin was close to 24%, which has came in around 30% in last third quarter. And normally this third quarter and fourth quarter, there's fresh crop, so price is very low. So normally if you see next 4-5 quarters, we want to settle at around 71% type of cost and 28.59% type of gross margin. So that's an area where we want to settle.
And any word on EBITDA?
So EBITDA, we want to maintain double-digit EBITDA. That's what our target is.
Okay. Yeah. Thank you.
Thank you. Participants who wish to ask a question may press star and one on your touchtone telephone. Participants who wish to ask a question may press star and one on your touchtone telephone. We have the next question on the line of Saket Kapoor from Kapoor and Company. Please go ahead.
Namaskar, sir, and thank you for this opportunity. Firstly, sir, what is our ad spend currently as a percentage of sales?
So our ad spend is close to 1.6% when we look at 9 months number.
Okay, and this is going to be the trajectory going ahead also? This,
so our target is, so we have parked the budget for close to 2% in our P&L. That's what we want to, because the marketing has given a big push in our brand perception, and it's also helping distributors and retailers to make a proper offtake. So we want to use this, and we get close to 2% as a marketing budget.
Okay, and our contract with Big B is for what term, sir?
So our contract with Big B will expire at around in October, basically September end or October 1st week this year, 23. So that's the way, and we will look into this once the contract will come to end, what we want to do as a next process.
Sir, and sir, can you give me a ballpark number for what is our gross block? How much money has been invested in plant and machinery, and what is the capital work in progress?
So basically, our gross block is close to 825-850 crore rupees. When we see 9 months number, at a gross block, I'm telling 820 crore.
820 crore.
Yeah, close to 820 crore rupees.
Okay.
And so CVIP, there is close to 60 crore rupees of CVIP is there, 66 crore rupees.
60 crore is the capital work in progress.
Yeah, 66 crore rupees.
Okay, and when will that capitalize, by March 23 or?
No. That will capitalize by in next 6 to 8 months. So we are working on frozen plant. That plant will come in next 6 months. So once this plant will installed in commercial production will start, then CV will come into the normal gross block.
And sir, last 2 more points. Firstly, on this raw material basket, sir.
Yeah.
What constitute the major raw materials, and what kind of integration do we have for them, and where are we sourcing the same?
Yeah, so our key raw material is largely edible oil, then few pulses like edible moor dal, chana dal, moong dal. So few pulses we are using a coat, namkeens and bhujia. And normally we are of course edible oil we are using few oil we are importing like palm oil, and cotton seed is a local production in Bikaner in Rajasthan. So these 2 oil we are using, and then few pulses like moor dal is largely produced in Bikaner, nearby Bikaner, and all the key pulses like peanut, moong dal is produced nearby Rajasthan itself. So we are using the same directly. We don't have any long-term contract as of now, but yeah, we are procuring from largely meal owners directly.
And the cooking oil is palm oil, you mentioned.
Cotton seed and palm.
Okay, but that also raises some the health issue parameters in the long run, sir. Palm oil is, if my understanding is, not the best advisable for on a regular consumption basis. So, what is the thought process of the management in terms of we calling it healthy snacks and ethnic snacks, and then the palm oil consumption? What kind of what is our understanding on the same?
Yes. So palm oil is not at all a bad oil, or it is not an unhealthy oil. It is a refined oil, and it imports from the different countries, and we use palm oil more into our western snacks and some of the light snacks, whereas in bhujia and in some core products we use the cotton oil, which is available nearby Rajasthan and even itself in Bikaner. And we use different oils as per the crops and as per the market and as per the timings. Sometimes if we get a good price and we get a good oil in groundnut, but that groundnut and all the oils are refined oil, and palm oil is the mostly and highly consumable oil in use in India, and especially by all the players like Lay's to Balaji, Haldiram and us, and it is not at all an unhealthy oil.
All right.
Even all the biscuit categories and all the snacking categories and all the cream categories, everyone is using the palm oil, and there the FSSAI and the government has a very strict rules, and they have a standard and norms, and with the same things we follow.
Right. Sir, one small point, sir. How have been the utilization of the cash that we raised in the IPO? And lastly, sir, when we look at your story, definitely it's a consumer-driven story going ahead, and there's a lot of very strong brand recognition all across your branding. But when we look at the investment point of view for investors, what is left on the table for investors to take comfort from when we look at your story and the market cap? Market cap it is commanding. What is the comfort investors who are looking in your growth story should get from going ahead at these valuations? What is that differentiating factor that we can command a market cap closer to above $1 billion in this snacks business? So the differentiating factor, if you could just elaborate.
Yeah. So point number one, we did not raise any money, direct primary money in IPO. It was all secondary money. So largely this company is good cash generation company. The company doesn't require fund for growth. Company can easily do all the investment by its own cash approval. And number two, so from investment perspective, so largely see it's a completely investors call, but yeah. From company perspective, there is very few consumer companies growing at 20% plus CAGR from last 6-7 years. From EBITDA perspective also, if you see other listed player and non-listed player, so we are commanding good EBITDA. So this year we had an EBITDA of close to plus 10%, but you will see last 2 quarters with an EBITDA of 11% second quarter, and in last quarter, third quarter with an EBITDA of close to 10.4%. Where you will see the gross margin has improved by close to 2%, so with a gross of 30%. So from EBITDA perspective, we had reasonably strong numbers from top and bottom line perspective. And also this industry is very big, so you will see this industry is where we are serving, like ethnic snacks, sweets, papad. This industry is close to 1.4 lakh crore market, where largely more than 50% is unorganized. So there is a big market and which we want to use, and there's a big growth opportunity which we want to use. So that's the growth opportunity which we want. And we have made a reasonably good brand. So this brand is highly recognizable. Amitabh Bachchan is our brand ambassador, and we want that's from the point, Manoj, if you want to.
I think Rishabh has already said it. So the endeavor here is to shift from, say, unorganized to organized as well. Even today as we speak, 50% of this category, almost 50% is unorganized. So that's again an opportunity wherein, creating a brand, getting a right distribution, expanding it to all corners of the country and, on the globe. So we see as an organization, a huge growth opportunity.
Thank you, sir, and all the best. Thank you for the elaborate answer.
Thank you. We have the next question from the line of Rahul Ranade from Goldman Sachs Asset Management. Please go ahead.
Yeah. Hi, Deepakji. Hi, thanks for the opportunity. Just one question or a couple of questions rather from my side. Can you, help us in terms of volume growth you would have done, let's say, for the quarter or even 9 months, if that's possible, across the different businesses?
Yeah. So we done on YTD basis, 9 months, we had done a value growth of close to 24%, and volume growth we had done close to plus 16%. And across each category, we done double-digit volume growth. Be it ethnic snacks, be it western snacks, we done double-digit volume growth.
Okay. So roughly, let's say 10-11% of volume and 4-5% of pricing is the way we should think about it.
Yeah. And so this industry in 9 months has grown at, so overall industry, when we see other industry data, this industry is growing at close to 15% around, and we grown at 24% plus. So we are largely 1.5, 1.6x of what industry is growing.
Understood. Fair. And just one, kind of bookkeeping question. So in the presentation, if I look at it, revenue from operations, and I try to add up the revenues from the 4 categories that we talk about, there is some marginal difference that is left over. Is it, some miscellaneous category of products? We should look at it like that?
There is miscellaneous category, like we have a restaurant in Bombay, and there are a few miscellaneous category which will add into this. There is a difference between this.
That's very small.
Small, very small.
Yeah, this is marginal difference. Yeah. So that was that. And lastly, sir, I just wanted to understand in terms of growth. So let's say a volume growth, we would have done around 16% YTD. Obviously, we would have had this benefit of a June quarter of last year being poor. So on a normalized basis, what was the volume growth we should think of going forward?
So see, of course, we cannot comment on more, future numbers, but yeah, overall, when this industry is growing at 15-16%, and that's what the data industry experts are giving, we also want to overgrow this, like what we did in the last 5-6 years. And next, one more thing. So in next 15 to 18 months, we are looking at more volume-driven growth compared to price-driven growth. What we are seeing in last 18 to 24 months.
Mm-hmm. So if you look at, our quarter one growth, volume growth was also around 13-14% kind of a stuff, right? Certainly quarter two was high for whatever reason, but going forward, as Rishabh said, I think that's the volume growth which we certainly can look upon.
Okay. And pricing obviously varies depending on what RM scenario you are in, and depending on how much we have to pass through. But kind of a mid-teens volume growth is the way we can look at it going forward also. Given the fact that we'll be kind of focusing more on distribution efforts also, probably that's a fair way to look at it.
Yes.
Got it. And just on the retail outlets, just kind of missed that point. So did we say 2.6 lakh is the retail coverage right now?
No. So I said yes. Our direct reach is about 2.6 lakh outlets. But we are in process of rolling out our DMS. So what we are doing is we are getting them listed with lat long mapping also as well. So if I talk about our listed number of outlets, it's about 1.36 lakh outlets, which years back was about 86,000. That's where we started from. But yes, the number where we reach directly across is 2.6 lakh outlets. Hope I've clarified this.
So 2.6 is direct. Out of that, 1.36 is covered by DMS. That's the way to look at it.
So that's on automation is 1.36 lakh outlets, right? Our reach, if you look at across country, would be about 8.5 to 9 lakh outlets.
Okay. And where would this number go to? Let's say 3 years out. What's the number we can look at across these direct and also in terms of overall? What would the internal target be?
So by end of let's say next 2 years, if we look at our direct reach, so these on DMS automation reach would be about 2.5 lakh outlets. That's where we'll reach, and our indirect distribution should be somewhere close to about 11.5 to 12 lakh outlets. That's what is the target we carry for ourselves.
Okay, the corresponding number for which is 8.5 now should go to 12.5.
Yeah, because that's the indirect uncontrolled coverage, but that's the number we're driving for.
Understood. So just in terms of reach itself, in the next 2 years, we are almost adding around 40% in terms of reach, right? If I were to take 8.5 and compare it to 11.5, we are adding around 40% in terms of reach. So that itself is a decent volume growth driver to think of it that way.
I think that will not be a very fair way to look at it, because what happens is that even today our reach in the core states, which contributes to about 72-73%, is very high, right? So our reach is going to come from focus states. Their throughput may not be exactly same what it is in the core states. But yes, I think if you look at over 2 years, that's the kind of volume growth or the value growth which we expect, and distribution would be one of the key drivers. That's what is the identified growth strategy is to increase.
And out of this 8.5 to 9 lakh in terms of overall reach, how much would be in our core states currently, and how much would be in focus states? Just wanted to understand the ramp up for that will happen in the focus state?
Look at out of 8.5, about 6.6 would be in core states only, so which is the largest, right? Followed by focus state, which is about 1.1, and the rest is others.
Okay. And the incremental addition in terms of reach will happen both in core and focus, is it? Where we are adding 3.5 to 4 lakh outlets, that will happen across both core and focus, or more tilted towards focus?
It will be more towards focus, because core, if I look at, just to put a number on table, so Rajasthan has about 4.2 lakh outlets as a universe, of which we are already present in about 3.2 lakh outlets, so which is almost about 70-75% kind of a reach. So their scope is not as much. Now, there are certain states where our numeric distribution is not even 5%. So that's where is the higher opportunity. So focus will get us more stores.
Understood.
Thanks.
Good. So just sorry to belabor on that point. So 75% of our distribution is bringing in 75% of our sales, right? So the throughput, at least for now, seems to be kind of fairly comparable between core and focus. Then wouldn't that be a correct way to think about it?
Could be, but if you look at that, very concentrated. Now, if you look at size of market, what we are servicing to. So universe, if you look at it, is about, say, 8 million outlets is the universe. Of this universe, or if this 80 lakh outlets, it's only 12.5 lakh outlets which are sitting in these core states, right? So that is, over-indexed. So the opportunity on the focus is far, far high. So currently, this is incidental to what numbers are, the way it's talking to each other. 75% distribution and 75% of business. But this will be a scissors. Distribution will go up, and business will not be exactly in line with that, because focus state will not have as much throughput initially.
Got it. And sorry, just last question from my side on Hanuman Agro. I missed the current capacity utilization on that. What would that be in terms? You said that it can ramp up to 60 tons per day, but what is it currently?
So its total capacity is 60 tons per day, but current capacity utilization is around 35%, 33%.
33%. Okay. Got it. Sure. All right, sir. I'll step back.
Thank you. We have the next question from the line of Gaurav Jogani from Axis Capital. Please go ahead.
Hello.
Yeah, Gaurav.
Yeah. Sir, my question, is with regards to this particular quarter. If we see, our gross margins have expanded by around 300 bps on a QOQ basis, from 27% out to 30% now. While, we haven't seen the commensurate increase in the EBITDA margins, and that is largely because of the other expense increases. So if you can help us out, what are these line items about, and are these sustainable going ahead, or, there is some one-off in this?
Yeah, Gaurav. So basically, you're right. So gross margin is increased from close to 250 basis points, and our EBITDA basically is in second quarter was close to 11%, which has reduced to 10.4%. So what has happened? So Diwali was in October mid. So our major ad spend was in October, which has came in second quarter. So our ad spend, which average was close to 1.5% in first 6 months. So it has increased to 3% in third quarter. So it has largely beaten our ad budget. But you see on an average basis, when you see 9 months number, our ad spend was close to 1.6%. So and overall, yeah, Gaurav.
There was this incremental ad spend, which got bunched up in Q3, and which is why your margins are a bit lower. Is that the right way to understand it?
Right.
Okay. And sir, as with regards to your gross margin, we have now started to hit that 30% mark right now. And going ahead, we will also be doing a lot of Western snacks, which I believe will be a bit margin dilutive, given that this new category kind of that you're entering into. So in this light, how should we look at the overall gross margins going ahead? Should we be able to maintain these levels, or there is some challenge which we might see going ahead?
Gaurav, so basically, we want to maintain this, but yeah, ultimately we're targeting gross margin plus 28.5%. That's what we're targeting for next at least 2-3 quarters. That's our target. Because few crops which are at lowest level right now, which will increase in next 3-4 quarters, because normally the crop season is in December, Jan, Feb. That's what crop season is. So for next 6 months, from first and second quarter next year, this price will increase, few prices will increase. But yeah, we are also taking price rise. But yeah, we're targeting 28.5, 29% plus gross margin. That's our target.
Sure. And sir, is there a possibility, given the fact that you have now good knowledge of the raw material prices, given you've been dealing with them since quite a long time. So do we take a hedge, on these raw materials, or maybe buy some cover so that we are protected for adverse movement on these raw materials?
So we are normally giving purchase. Normally we are not storing anything, or we are not doing any contract farming type of thing. But yeah, we are largely doing some small purchase for next 6 months, 5-6 months, but that is very small, from 25-30% requirement. Then we are normally purchasing on spot. On spot means we are normally giving purchase orders close to 30 to 60 days type of thing. That's for giving purchase orders for key commodities.
Sure, sir. Got it. Thank you. That's all.
Yeah.
Thank you. Participants who wish to ask a question may press star and 1 on your touch-tone telephone. Participants who wish to ask a question may press star and 1 on your touch-tone telephone. We have the next question on the line of Sachin Bobade from Dolat Capital. Please go ahead.
Yeah, hi, Bikaji and team. I have one question related to logistics. So when you say you are getting into new states or entering in a new state, I assume that it is for all products, including Bikaji, Bhujia, and everything. So in that case, I just wanted to understand how this logistics works here. So your goods travel from Bikaner to other states. In that case, what is the incremental cost that is required, or incremental increase in cost for this logistics?
So currently your logistic cost is close to 3.8%. 3.8%. But yeah, overall, ultimately we'll see when we have made all the plant, like in Muzaffarpur, in Guwahati, in Kanpur. So objective, and we'll manufacture Western snacks and namkeen category. These two categories will largely manufacture in all the plants. So our target is to keep improve more efficiency, and we will largely produce only two categories. We will not Bhujia, Papad, and Sweet. These three categories will always produce in Bikaner. That's what target is right now. And these two categories will manufacture across all plants of India. So overall, on the spend basis, our logistic cost, we're targeting to keep the same, because Western snacks have more logistic cost. But as we are manufacturing in the nearby location, so we want to we'll keep the we want to try to do the same, the 3.6, 3.8% of the logistic cost. That's what we have taken a budget in our books.
But when you travel far, like for example from Bikaner to Karnataka, for that matter, or states in southern side, the cost won't increase much because you have to manufacture in this Bikaner and then transport it.
Basically, when we are manufacturing chips or Western snacks, namkeen, so largely.
No, sir, I'm not talking about other products. Only about Bhujia.
So Bhujia, that cost will remain same. We'll manufacture here Bikaner only. That all the will sell to all part of India.
Hello.
Yeah.
Yeah.
So this Bhujia, sweets that we manufacture, that logistic cost will remain same. Like for Karnataka also, our logistic cost will be same. Like in Assam or in Bihar, logistic cost will be what we have right now.
Okay, thanks.
Thank you. Participants who wish to ask a question may press star and one on your touchtone telephone. We have the next question on the line of Prateet Wajani from Union Mutual Fund. Please go ahead.
Hello.
Yes, Prateek.
Yeah, thank you for the opportunity, sir. Sir, I have a slightly long-term question on slightly long-term. So we've seen your gross margins from 42% going down to 39, and now you are doing a quarterly basis 30%. So what is your long-term gross margin target?
So on long-term gross margin target, so see, currently we are at 30%. We want to sustain this for at least next 3-4 quarters. And overall, our gross margin target is we want to increase to 2-3% more. But yeah, in next 3-4 quarters, we want to maintain this between 20 to 30%. That's our target is.
Okay, so with the geographic expansion also, this would be sustainable, is what you mean to say, right?
Yeah, because we with geographic expansion, we are also making expansion at plant level. Like we have installed a plant in Guwahati to cater for the northeast market. Like in Bihar, we have 2 plants came up. Like in UP also, which is a focus market, our plant had started in August month. So we also strengthening our back-end operation.
Okay, sir. Thank you.
Thank you. We have the next question on the line of Abneesh Roy from Nuvama Institutional Equities. Please go ahead.
Yeah, thanks. Few follow-up questions. One is on positioning and pricing. How do you compare with Haldiram's? Because ultimately both are strong brands, and many markets you'll be competing also. So, for example, if now there is some deflation, who takes the price cut first? Is there one leader and rest of the players follow that in the coming days?
So how it works is that it's either or. One of us would take the lead. Sometimes they are ahead of us, and sometimes we are ahead of them. Talking in terms of price parity, so we are more or less in line with what Haldiram is. And however, we spend more on branding. Therefore, we don't want to be in any which way under index to the base of the brand. In terms of, yes, for our focus state where we are weak, what we do is that we offer a couple of a percentage higher than what Haldiram would be doing. So that's the stimulus for the retailer to sell our brand there in its store.
No, but there will be flip side. In your strong states, there could be another player who wants to enter, or existing player would also want to do the same 2% lower, which you mentioned in your focus states. Doesn't that happen? Then what do you do?
No, so see, end of the day, whosoever be the leader in the focus state, what we are aspiring to be, we are aspiring to be a challenger brand. Not that we are looking to be leaders in those states. So if let's say Haldiram enjoys say 50% market share, 50% is governed by rest of the companies, and it's a fragmented category. If you look at top 3-4 companies put together will also be about say 60-65. 35% is the share which is completely fragmented stuff. So our phase 1 would be to get each shares from them as well, and also try and see that what best can we get out of the leader is.
Right. My second question is on the Q-commerce and e-commerce. So definitely your category is impulse category, which is quite well placed on the Q-commerce. So could you tell us, when I see the key Q-commerce sites, how do you be placed? Are there some other players who are much ahead of you? I understand the number one player which you have been highlighting in this call, but how are you placed in the Q-commerce and e-commerce?
So we certainly see this Q-com as a upcoming big opportunity, and I think that's how consumer are getting ease, and therefore this business is only going to grow. So in terms of our presence, we are present across all Q-com channels, right? The thing is that it's about making your presence there in the channel at all point in time, and that's the task our sales team is working towards. That how's that we can ensure our fill rate, improve our fill rate in these stores, in these channels. That's the opportunity what we are working on.
Right. Final question. We have seen the larger listed FMCG players do their own B2C websites, and also they have been aggressive on the M&A. They have been acquiring B2C startups. Of course, in the healthy snacks also, we have seen many B2C startups launch. Of course, now the liquidity has dried up, so there is a bloodbath in the lot of these. Would you evaluate some of these because it will lead to good learning also, or you think in your category better to do it through the third party?
No, so B2C, if you're talking about, we also have our website wherein we service directly to the consumers as well. Right, so that's there, and the team is promoting that stuff, so you will see that it will only go up. However, the category we are in, which involves a huge logistics cost, so practically, it would not be, possible for all consumers, so or for us to cater the larger geographies or larger consumers on that. But yes, in terms of presence, like most of the other companies or our competitors do, we also have our own channel there.
And are you divulging numbers? How much is Q-commerce? How much is e-commerce?
So Q-com is pretty small and subset of our modern trade business. If I was to give you a number, it's about 8-9%, which comes from modern trade, and of which is a subset which is Q-com is pretty small. Would be say about 15-20% of modern trade.
And e-commerce?
E-com and Q-com put together, I'm saying that's what it is.
Okay, then so it is pretty small. What is the rest of the FMCG? Then it's much smaller.
Yeah, it's pretty small. See, if you look at the cost, see, unless and until someone buys more than 300 rupees, these even Q-com channel also start charging. So therefore, for these bulky product or low density product, it will eventually grow. For now, it's more of a convenience which consumer looks for, and hence companies are to be present, so they cannot make a choice on that.
Okay, got it. That's all from my side. Thank you.
Thank you. Participants who wish to ask a question may press star and 1 on your touch-tone telephone. Participants who wish to ask a question may press star and 1 on your touch-tone telephone. We have the next question on the line of Pankaj P from Funds Pro. Please go ahead.
Good evening, Deepakji. Good evening, Vermaji. Myself, Pankaj from Bikaner Funds Pro. And my question is, like, the growth we have on Y-on-Y, how much percentage is coming from our core states? How much percentage is coming from our focus states? Can you elaborate on it?
Yeah, so our presence in the core state continues to be, as high as about 28% growth is coming from our core states, followed by focus states, which is about 24%, and others, as we said, that it's our footprints there that contributes to the later part of it. So about 19% there.
Okay, and the second question is that, and we are incentivizing like retailers in the focus state. What companies planning to do in our core states to maintain the same level of market share, leadership position in the market in the core states?
So I'm pleased to inform that now we continue to look at last 2 years, year on year, we are gaining share in our core states. So that speaks the power of our brand. What we are doing is, so that's what, in fact, when I was talking that part of our strategy, we are looking at, these core, focus and other states differently and different intervention. So in focus state, our growth strategy is to spread, to increase our reach, because that's where the growth will come from initially. In our core state, what we are doing is we are doing about upgrading, selling high value packs. We have identified focus SKUs. I mean, basically that's nothing but an endeavor to how to improve our gross margin. So this is about premiumization. So focus on these products is far high. We are also now expanding our direct reach in core markets, so as to go down top straight up 5,000 plus in these markets as well. So these would be the drivers for core state.
Okay, and the last questions from my end, sir. Like, we have a Bikaji exclusive franchises. We have seen most of the cities, and the numbers which we are presenting as a retail outlet can you bifurcate that the small grocery shop, how many, like how much they are, and how many like that exclusive Bikaji franchisee in that numbers?
Yeah. So basically, we are very limited Bikaji. We are not into Bikaji giving any franchise to any person. Largely, all we have we have one store in Bombay, which is the type of Hazirab outlet. That's it, and we have just a branded stores, very limited, like 30-40. That's it. Largely, all are pure distribution business.
So those branded store are also part of our marketing investment, what we do basically. Otherwise, no, we are not into model, and nor do we think about it in at least next couple of years.
Okay, sir. Thanks a lot, sir.
Thank you. That was the last question. I would now like to hand it over to the management for closing comments.
Thank you everyone for joining us on the call. Besides this, if any of you have any kind of question, can come to our bankers or can reach out to us. I will be happy to take. Thank you once again.
Thank you very much.
Thank you.
Thank you.
On behalf of Bikaji Foods International Limited, that concludes the conference. Thank you for joining us, and you may now disconnect your lines.